It's Forex Focus, brought to you by IG. A very interesting end to the week for this US dollar as the story expands from midweek being primarily centered around US inflation, a rise off of CPI data, and a bolstering US economy, to now taking a step back at a more global picture as fear grows globally amid Middle Eastern tensions and the ongoing Russia-Ukraine tensions, and we'll see what impact that has on the US dollar, as well as the Treasury bond dynamic and increased demand there. Starting off with that US dollar piece, we're seeing strength across the board, hitting year-to-date lows in the euro, the British pound, the yen, and the Canadian dollar, all hitting some pretty key price levels. Euro under 107, we'll take a closer look at that in just a minute. British pound below $1.25, and that Canadian dollar up above 137. And you can tell that this is a flight to quality, because you're seeing, although there are year-to-date highs against the yen, you're seeing that pair USD/JPY down on the day now, as well as the Swiss franc. Not too much movement there compared to some of these other European currencies, as the Swiss franc and the Japanese yen are also seen as traditional flight to quality currencies for reasons like economic stability and liquidity, but the US dollar prevailing above all else. And another market of a traditional flight to quality is gold. Gold through all-time highs. That's been the story this year so far, but continuing to tick upward as we see traders turn away from potentially volatile currencies, as well as foreign debt, other types of bonds, towards something that has a physical store of value, like this gold market, and traditionally less volatile. Not this year, as we've seen a rise through all-time highs month after month, which has come along with an interesting positive correlation to US stocks that have also ripped through all-time highs. But you're seeing this general flight to quality story play out in all the traditional places, as well as Treasury bonds. Demand for US Treasuries growing today, which creates an interesting dynamic, and I wanted to walk through a little hypothetical example about how this path to quality occurs and how it affects these markets that we've been seeing. You see Treasury bonds that, because of earlier this week, yields hit year-to-date highs, the 10-year above 4.5%. So the return on those at year-to-date highs, but now down a little because of that growing demand for a safe asset backed by the US government. And for that to happen, you have to first convert your whatever currency or whatever asset you're in, convert it to US dollars, bolstering that dollar further, strengthening that dollar as demand for the dollar grows, and subsequently transitioned into things like treasuries for whatever time period, the 2-year, 10-year, even the 30-year. So we're also seeing that dynamic play out. Jumping back to that US dollar piece, we are looking at one of the major pairs, euro dollar breaking below 107. This is notable because if you look all the way to the right of the graph, we've been hitting key price levels for the past 3 or 4 trading days. Earlier this week, it was ringing the bell at euro dollar breaks 108, breaks 107, and now even intraday looking very close at that 106 level. So taking a wider lens, these are year-to-date lows dating back to November of last year, and just before that, looking back near the fall in October and September, the bottom for the past year plus is around that 105 level, which is very much in play if current trends continue. Of course, we could see a reversion here if demand for the US dollar lets up. But year-long lows and beyond still very close as we approach 106, 105. Finishing up, looking back at dollar pairs, you're seeing a lot of investors leave these minor currencies, especially in Europe, for US dollar. Some of the biggest moves in that Swedish krona, in that Hungarian florent, over 1% moves in both of those pairs, as investors in Europe and closer to those Middle Eastern countries grow nervous around escalating tensions now involving Iran in the current Israeli-Hamas war, and investors all over the world flocking to this US dollar, this gold market, and US Treasuries amid a lot of uncertainty and fear.